Today we're doing some stock analysis on the Procter & Gamble company, ticker symbol PG. We're going to be looking at the fundamentals, then giving my fair valuation of the stock, and then having a little bit of a look at some technical analysis as well, because I know you guys like that. So it's currently at $142.50 a share, just down from its all-time high of $147 and was that about 82 cents. I was telling you guys to buy this back in March when it was 124, so you would have made a good bit of return there. But if we look back to pre-pandemic, it was $127 a share, $92 a share in the bottom of the pandemic, and then went up to its all-time high at that point. Bit of a rebound and then back up again. So it's just shy of its all-time high, but is it still a buy? Let's have a look at the fundamentals. So firstly, it has a market cap of 344 billion. Share price is a little bit old, $141, so it's gone up slightly since then. It has a very healthy 2.45% dividend, and the ex-dividend date is the 21st of October. So if you want to be eligible for the 2.45% dividend, well, buy now, buy before the 21st of October, and you will be paid, 2.45% of whatever you buy. Well, sorry, you won't. You'll get paid a quarter of that, but it's a 2.45% dividend, which is very nice. So first we want to look at the PE ratio. Is it less than the market? 25.8 to 40. So that is a pass, massively under the current market. Lower than its sector. Its sector is consumer defensive, 25 to 27. So that is a pass again. And now we want to look at the revenue. The revenue has gone from 66 billion to 76 billion, and that is in the throes of a pandemic. So that is another pass. We're going to be going into these numbers a little bit deeper actually next. And then we want to see, is the profit increasing? 9 billion to 14 billion, 4 passes, excellent. Well, let's just cut through it. They're buying back the shares, 2.6 to 2.5. And is the free cash flow increasing? Yes, it is. 11 billion to 15 billion, which gives a free cash flow ratio of around about 22. So that is excellent. All 6 passes looking very, very good in terms of that. So before we get into the next stuff, firstly, please give a like on the video. Would mean a lot if you gave a like. But let's have a look at some of these revenue numbers. So this is from January, February, March, April, May, June. Can't do my maths, can't do my dates, but you can see the pandemic from 2018 to 2021, revenue increasing steadily over time. Even with the pandemic happening, revenue is still good. Where is the net income? The net income is, I've lost it. There it is here. There's the net income, 9 billion, 3 billion, 12, 14. So that's going up again. And then even if we look at the free cash flow ratio, 11, 11, 14, 15. So all of it's going up, even though this company was in the throes of a pandemic, like every company, but really has gone from strength to strength. So that is very good news to see. So let's have a look at my valuation of the stock. We use a discounted free cash flow. I've calculated the future cash flows. I think 2019 and 2020, a bit of an outlier compared to 17 and 18. So I've estimated a little bit more reservedly. And if we look at the calculated stock price, in terms of discounted free cash flow, that actually gives a calculated stock price of $330.18, means that's a 130% discount compared to that $142 stock it is now. So that is a massive discount in discounted free cash flow. Slightly different story if we look at the Buffett-Graham intrinsic value. Because of the earnings per share of 5.5 and that expected growth over the next 5 years of 7.6%, that gives a fair value of $130.36 and a Graham price of just over 100. The Graham price is kind of a buy and hold forever stock. So those are pretty wild values, 130 to 330. So, you know, if you're thinking it's going to be somewhere in the middle there, I mean, it's still at a pretty good price. If we look at that now, it was at $90 during the pandemic. That would have been a time to buy in the Graham price, and you would have been correct there. Obviously, the Graham price would have been slightly lower because of the decreasing revenue and decreasing free cash flow that it was, but this time last year it was still pretty good. So this would have been a definite buy down then. Will this get to $330 a share? Probably not. I think that is a little bit too high. So if you're looking somewhere in the middle there, I think that's pretty good. The stock does need to break its all-time high again. So there has been a bit of resistance here. In fact, let's just get on to the technicals. That's definitely something. So first we'll look at some indicators I'm looking at. We'll look at the moving averages. We'll bring up my favorite moving averages. It's the 50-day, 100-day, and 200-day moving averages. So let's just get that up there. We want the 50-day in green because that is the shortest moving average. Then we want the 100-day in yellow because it's the next fastest. So let me just create that one there with the 100, and we'll put that as a nice bright yellow. And then we want the 200-day as red because that is the slowest. These are just the averages I like looking at. It really tells a more short-term view of the stock, but not completely short-term, which is just in a couple of days. That's why I like looking at them. So let's just go to a year and have a look here. So a lot of lines on the chart, but what do we want to see that has been good? Well, we want to see good momentum. So you can see you had a lot of bullish signs. The shorter day crossing above 2 of the longer moving averages, which would have been a buy point, and then it would have gone up from $136 to $140. But where's the stock in the short term? You can see that there has been a lot of resistance at the 100-day moving average. Hasn't really broke that this year. Once it had that shoot up in March, or since about April, it's been pretty consistent. You can see it broke below it slightly, then bounced back up. The price has been on the whole higher than all 3 of the major moving averages apart from recently. So if you're looking at momentum, this is still pretty solid momentum in terms of the short term. So the moving averages look good. Let's just get rid of these. The next one I like to look at is the MACD. So let's just get the MACD up. And the MACD, if you see here, well, actually, this is a great opportunity to see here what you would look at the MACD. You can see the signal line has crossed just 2 days ago on the 11th of October, which means that we're expecting some bullish price movement. So this would be a buy signal. Now, if we just compare that to other periods in time when the MACD has crossed, you would buy here in June, you would have bought and you would have rid the wave up until $144 from 134, so that would have been a solid buy. If we look at here, you can see the MACD cross there, $134 to, on that day it would have been 134, so that was good movement. And then the next one we want to look at is this guy here from in March, which would have been $122, sorry, to up here, which was about 137. So there has been a couple of things where the MACD has switched briefly. So maybe this is one of those instances, but it looks like it is a buy signal. And over time, this has been a good indicator to buy on. Then the final indicator I like to look at is, of course, the RSI, Relative Strength Index. So let's just bring that up and close the MACD down. So this is whether the stock is in overbought or oversold regions. And you can see here the stock was recently in the oversold region, which would have been a good time to buy if you're bullish on the stock. And you can see since then the price has gone up and it's in about the middle. The stock hasn't really hovered about the middle for too long. It was in the overbought region here. So if we look at points where it was in the underbought region, you can see that that was definitely a time. And if we zoom out and go out even further, I mean, pandemic, and then March and May again, February and March of those months. So RSI would have been a good opportunity to buy just a couple of days ago when it was at its lowest. So I would definitely watch out on that and see what's coming next. Right, guys, thanks for watching. Please give a like on the video. I need to move my cat out of the way of the screen, and I'll catch you guys next time.